Wamsi, welcome back. Good to see you again.
Good to see you, Carl. Thanks for having me.
You've gotten incrementally more positive on the name as the quarters have gone on last couple of years. What's it going to take to impress you tonight?
Yes, we've sort of looked at this stock now for several quarters where we felt like this was a market perform, but we pulled the trigger on it and upgraded the stock in December because we felt that a lot of the worries that were surrounding this particular iPhone cycle were baked in. And this is a market where we think, people are looking at positioning from a cash flow perspective, stability in cash flows, pricing power, having the right footprint, having this fortress balance sheet, all the things that are super important at a time when the Fed is tightening. That's where Apple screens well. So we think that this is really set for a period of outperformance, given that there's a great product pipeline that the company has. At the same time, it fits very well across all the macro issues that are impacting the broader tech market. Specific to the quarter, Carl, I think that it's going to be important that they make the numbers, which is, we're slightly ahead of consensus over there, as you noted. But then on the guidance, right, this is a very tough compare. Remember that the iPhone 12 launch was delayed and staggered. And so that created a very strong March quarter. It creates a very tough compare. And so we'll look forward to seeing what is Apple exactly going to message about component availability and about its ability to sort of overcome that very tough compare. We're actually slightly below consensus as it comes to the March quarter, but we think that that's well understood by the street at this point.
Interesting. So defensive in a rising rate environment. I'm thinking back to a lot of the bullish calls earlier, or I guess late last year, that were pinned on AR/VR product, a new product category. Were we over our skis at that moment? How much of a setback is a delay to 23 if that's what we get?
Yeah, I don't think we'll really hear a lot about AR and VR on this particular call, right? And Apple typically does not show its cards. I think the earliest that you can glean something into what Apple is doing is going to be at the Worldwide Developer Conference in mid-year. So we've got some ways to go before that really gets incorporated primarily into people's thinking. I think at this point in time, what people are going to be looking at is how much is the supply chain going to impact the iPhone 14 launch timing, because we've heard from some of the semi-cap players in the supply chain that there are issues around push-outs, and so availability is going to be key over there. Now, that said, Apple has been extremely good at navigating supply chain problems. They called out for about $6 billion headwind in September quarter and a little higher than that in the December quarter. I think it'll end up being a little bit better than that because they're so good at managing the supply chain. But does this continue to become a problem in sort of the near term? I think that's what people are going to be more focused on. On the augmented and virtual reality side, I think we'll get more of a color on that at WWDC. And look, I mean, a new product category always matters a lot. It's not that the numbers themselves are going to move materially in fiscal 23 just from the new product category itself. It takes a couple of years to hit maturity, but the multiple usually really acts favorably ahead of these sort of completely new categories that can be material down the road. And we've seen that with many, many product launches for Apple in the past.
Though, of course, we go through the cycle of people saying whatever new product they come out with isn't innovative enough and isn't going to sell anywhere near as much as the iPhone. And then, eventually, if we look at the watch and other things, the attitude reverses. But you mentioned the supply issues. A couple things I'm going to be watching, hopefully you can reflect on this, is exactly how Apple has handled the supply constraints. Were they able to direct customers into higher-end phones and put their components there and get a better margin? And then also the degree to which Apple was able to redirect and upsell into what it has in stock. Did Apple's customer loyalty result in them being able to sell more Macs or sell more AirPods or whatever they had in stock versus what they didn't?
Yeah, no, it's a great point, and I think that it's absolutely the right question, right? When you look at sort of the aggregate supply chain, people are taking and making whatever they can, but remember that the skew is always towards the highest end product because consumer balance sheets have been so strong, and the willingness and the propensity to spend for a product that they need, the little bit incremental it takes on an upsell, whether it be a monthly payment or whether it's immediate, is something that consumers are completely willing to do. And so I think what has happened in the quarter, and we'll see in the results tonight, is that the iPhone 13 is going to be very, very strong. Some of the components came at the expense of iPads. So we actually think that iPads would be relatively weaker in the quarter. Some of them came from lower end phones. So I think the mix is going to be extremely strong because partly the phone mix gravitates toward the Pro and Pro Max, the component availability has been geared towards that as well. So we think that this is going to be a really interesting and telling quarter on consumer buying preferences, their ability to sort of support, higher ASP products. And I think that's what Apple Print is going to tell us tonight.
Yeah, definitely a great point at the end there about the consumer, household budgets, retail sales, and the rest. We'll see what happens, Wamsi. Thank you as always. Great to see you. Wamsi Mohan, B of A.
Thanks for having me.